Now, the next obvious common sense question you want to ask is how profitable is each business at Google? As you can see here, the Google Services business is by far the most profitable business. It's actually the only profitable business within Google. So that's how Google discloses its segment revenues and profits. So in this case, the service revenue has an operating income of more than $24 billion in the third quarter alone in 2021. And that has been an increase from about $14 billion in the prior year. However, if you look at the cloud business, it's actually a loss-making business. So in the third quarter, the cloud business lost approximately $600 million. Whereas for the other bets, which is mostly Waymo and Deep Link, is actually losing $1.3 billion in third quarter alone. So as you can see here, it's quite clear strategy that Google is using the cash cow machine from advertisements and use that profits to subsidize the other growth areas that Google is not really making a lot of money from, but they're strategically important at Google. So for example, if you have the best autonomous driving technology in the world, you are able to monetize that at some point down the road, even though it is losing a lot of money for Google today. But as I said, since Google is so profitable in the advertisement business, it's able to use that profits to subsidize the other less obvious but maybe strategically important areas for the long term. Now, the next great thing about Google is what I call operational leverage. So as you can see here, Google's revenue grew by 41% in the third quarter this year. However, its operating income grew by a whopping 66%. Now, it's just common sense business logic that when you grow revenue, you need to incur expenses to support that revenue growth. But for a great company like Google, since a lot of the expenses are fixed, that is, when you have something like a search engine, if you end up having 1,000 more advertisers all of a sudden tomorrow, the cost you need to incur to grow that revenue is going to be smaller. This operational leverage just means that since a lot of the costs at Google are fixed, that is the expenses that have gone into developing the search engine, it's able to incur less costs to grow the same amount of revenue. So that's why when you grow revenue by 100%, for example, your costs only go up by 50%. So the actual goes into profit straight away. And that is what happened at Google, because all of a sudden you got a lot more revenue growth, but you don't need to incur as many costs that you need to grow that revenue. And that is why the operating profit at Google is able to grow at an impressive 66%. And that's the type of business you want to invest in, the business that has positive operating leverage. That is, when things are doing well, the company is able to retain more revenue down to the profit line. Next, let's look at different margins at Google. First, let's look at gross profit margin. Google has a gross profit margin of 58%. Now, what goes into the cost of revenues at Google is its staff cost and traffic acquisition cost. And then from 58% gross profit margin, Google is able to retain 32% down to its operating margin. So the difference will be operating expenses in research and development, sales and marketing, and admin. And then from 32% operating margin, Google's net profit margin is 29%. So the difference will be taxes and interest expenses. So as you can see, for a large company like Google, its margin is actually crazily high for the size of the company. Now, speaking of R&D, research and development, this is another interesting phenomenon at Google. And when I compare a company like Google versus a similarly large company, let's say Apple, you get very interesting comparison here. So the R&D at Google is at a 12% of the total revenue Google generates. That is very, very high actually, especially when you compare to a company like Apple, whose R&D as a percentage revenue is only at 6%. Now that is worth a lot of discussion here, because for a company like Apple, it's relying on constant sales of devices. So every year Apple needs to sell a large amount of devices so it can sustain revenue growth. Whereas for Google, it's not really a device business, it's not a one-off. So the beauty of Google is the business nature is recurring. So once an advertiser starts to use Google and once they see good results, and Google is indeed a platform that you see continuously better good results year on year from your advertisement efforts, that advertiser will stay. So that loyalty is going to turn into recurring profits. For a company like Google, with the recurring profits, it's still reinvesting a whopping 12% of the total revenue back into R&D. So that is a very, very strategic and long-term thinking, because you are not just keeping all the profits and give it back to the shareholders. What Google is doing is to reinvest a lot of the profits back into future projects through research and development. However, if you look at the same at Apple, it's actually quite worrying, because Apple is only spending 6% of the revenue back into research and development. But the research and development requirements at Apple is much higher, because every single year Apple needs to bring out a new phone that is meaningfully better than the previous generation, so that people can start to replace the old phones with the new phones. But whereas for Google, the search engine doesn't need to be like 2 times better this year versus last year, because it has been working very well already. Whereas for Apple, the phone needs to be meaningfully better. So that is why the R&D intensity and the requirements at Apple is going to be much more demanding than that at Google. Whereas one is spending 12%, the other is spending 6%. So comparing this, what is the one thing I take away? Which is Google is here playing the long game by investing a lot back to the growth areas, whereas Apple is actually more conservative. And the reason why I say Apple is conservative is because it's not spending as much as it should back into growth. And finally, let's look at the revenue by different regions. So Google is actually a more diverse company than I thought before I look at these data points. So for example, only half of Google's revenue comes from the US, and that is a pretty diverse pie chart, with EMEA at close to 40%, and then Asia Pacific at close to 20%. So Google as a search engine is able to adapt to local markets pretty well, and this is a pretty diverse pie chart. So once again, this is the difference between perception and reality. Like if you ask me before today how much money Google makes from the US, I say easily 60-70% or even more than that. But as you can see clearly, that is not the case. Google is actually a much more diverse company than I thought before. So why I say Google is one of the most boring companies I come across is because, one, it's been doing the same thing pretty much for the last 2 decades. That is search engine to begin with, and then rolling into all these other categories: Gmail, Google Maps, Chrome, Android. So it's doing pretty much the same thing over and over again, but just becoming better and better. And it's not the type of business where you read a lot of enticing headlines in the media. And it's boring because it's just not the type of product you get very excited about. Like you search something, you don't really feel excited about getting the results. Or when you use Gmail, it is just a pretty basic daily tool you use. You don't really get a lot of pleasure or excitement from using Google's products. And that is a big difference from Apple. You do get a lot of excitement and pleasure from using Apple services, and you feel you're part of the community. You feel almost privileged of using Apple's products. That is not the case with Google. That is why I say, from a user point of view, what Google does is not very exciting, and it's actually pretty boring by just doing the same thing over and over again. Search engine was how Google made its name 20 years ago, and it's still the case. It's still a large percentage of the revenue and the business contribution at Google. But why I say it's one of the greatest, if not the greatest company that I come across, because one, the search engine is by far the most important asset at Google, if not the most important asset globally. Second, YouTube is another important and strategic asset at Google. And third, a lot of the products at Google, if not all of them, are just free for individuals to use. And that is boring, but great. And then Google is by far the most obvious company that benefits from this mega trend of transition from traditional media into digital media. It does have some other competitors, like Facebook is also in this digital media industry. But from my point of view, Google's product is much more important and indispensable than something like a social media apps. And then finally, despite the perception that Google is a boring company because you don't read a lot of exciting things about Google, it is actually the most aggressive spender on research and development. This is the company that spends somewhere between 25 to 30 billion dollars each year on research and development. That is by far the highest globally. So as a matter of fact, it's not really that boring because a lot of things go back into growth areas, enhancing existing products. Search engine just becomes better and better and smarter. All these other free products, Gmail, Google Maps, are just becoming better and better over time. By the end of the day, digital media will continue to steal market share from traditional media. Not only that trend has been taking place tangibly, you can actually see that trend around for the last 5-10 years, but if anything, that trend is actually accelerating. And Google is by far the biggest beneficiary of that trend. So that's our take on Google. Hope you like it. Any other companies you want me to cover, let us know in the comments. Thank you.